big part of the conversation. And, I think the thing that's happened that's going to affect people that people don't realize, and I was talking to somebody about this, is that we hit peak silver, $900 an ounce. They pulled out of the ground in 2016. Peak silver means they think we'll never pull that much out of the ground again. We've been in the 800 ounce range of pulling silver out of the ground pretty much every year. This year we have 174 million shortage of silver. And you have to think about it from a business point of view that the mid 2012 to 2020, silver did not move, and silver became an asset that mining companies were not interested in. Because really, when you talk to miners after 9/11, when the price started to really take off, the price to pull silver out of the ground started to creep in the $19, $20 range. Well, if you look at after 2012, 14, 15, silver sitting in the $15, $16 range. There's no reason to mine silver.
No.
And so they just got out of the game. And so you had 5 years where silver miners were just unprofitable, not interested. And so you have this, this whole time when these silver miners get out of the game, they don't want to mine. And it's not easy to mine silver. And it takes a ton of time. It takes 10 to 15 years to set your sights on a silver mine and to actually pull silver out of the ground. So you look at what happened is for 2014, 15 to 2020, they just got out of the game. They just stopped mining silver. And so now with 2020, this price started to go up. And you look at the charts, price started to creep back up. So now they're getting interested again. So there's mines. They're all, all the talk is silver mines, which is great. I mean, but they're behind. It's going to take them a while to catch up.
Yeah, I think we're.
What'd you say, Jake?
Five consecutive years of deficit.
Yes, correct.
More silver being used than being sourced, and the title of your book is Aging Well So Far.
Yeah,
and especially in the last couple of months. And as far as how much is being used, well, we know Trump likes to spend. Right? He did it in his first term. We had all this talk about shrinking our government with what Doge was doing, but we haven't seen it.
Yeah.
Our deficit this year is already up 14% from it was last year to date.
Mm-hmm.
And so what Trump loves to do is build the military. Great, fine. We need silver for all of it.
Right.
He used it. That was a pretty massive operation that was carried out a few days ago.
Correct.
So from a business perspective, I mean, what I tell clients all the time, it's a pretty simple math problem. We need silver. We don't have enough of it. It's becoming increasingly difficult to source for some of the reasons that you cited. And we need it. We need it. There's no avoiding that. In fact, that growth, that need, that demand is only going to exponentially grow from here on out for at least the next 10 years. And at that time, are we going to see silver hit $50, $75, $100 an ounce and beyond? Well, then we're going to see the miners dive back into it. Correct. And it's going to take them at least 15 years. I heard longer time frames.
Yeah.
But it takes a long time to find, dig, and produce the actual metal. It's not something that can just correct itself overnight. And here we see this surging demand for it, and there's no end in sight, right? Are we going to stop using computers? Is the EV market going to fall off? Are we no longer going to use solar? Is the military usage going to evaporate? No, of course not. All of that is increasing. And so everyone in this business, the three of us and everyone else we work with, we see this shift. We see this growing tide and this supply that isn't moving. It's not increasing with the demand. Yeah. There is a math problem. It does not add up. And of course, we've just started to see the price of silver move. And I don't think it's anywhere close to being done. I mean, do you guys think it's going to fizzle out at $35 an ounce?
No, and also Congress, authorized the Defense Department to they have unlimited funds for the defense from the U.S. Treasury through 2029. So they, in essence, have a blank check, right, to continue to buy and build more military, supplies in whatever facet that we need. So you already have this $148 million deficit before this happened. before all these things happened. And, you know, I look at, you know, what's happened so far this year. I mean, silver's outperformed Bitcoin and the S&P this year so far. And nobody is talking about this. I mean, literally, you don't hear any of that talk anywhere. I don't, on the news, if you watch it, they don't want to mention it. And I still think there's plenty of room. I still think you're looking at a 70-to-1 ratio gold to silver, which puts silver today at like $46, $47 an ounce if gold doesn't move up $1. So that's the number that I think in the short term we're going to hit. I think we hit that. I think we have a chance to hit that before the end of the year in silver. And you know, I'll throw out my. Let's look at the U.S. military facilities. I know we have a chart on that here. So you look at the military bases here. You got, you know, yeah, let's make that a little bit bigger. You got in other persistent U.S. military, 15 years in operation. Yeah, so I mean, we have a pretty significant presence over in the Middle East. I think that when we look at what's going to happen, the dynamics that are changing in the Middle East, I think it's important to know that we are pushing towards. It seems like this administration is pushing towards Iran having a shift in government. I mean, that's by doing what they did, they laid the groundwork because Iran's last carrot was the potential for nuclear weapons. And so now that that's gone, most of their military operations are in desperate situation. I think we're going to see a change in government there. I think we're going to see a regime change. I hope we are not involved in that. I hope it just kind of evolves and the people there's an uprising. And we've seen these things before. We saw it in Iraq and we've seen it in other places that we've gone in. So I think that's what's going to happen.
Well, there's certainly no stability over there.
Correct.
Right? And I mean, it's a mess. It's a bloody mess. And I mean, the best we can hope for is just some sort of stability. And where does that come from? I mean,
Sure.
the Middle East has been a disaster for my entire life. This is
no
normal.
No one can remember a time of any type of stability or peace there. And I think that, you know, the conversation that we should be having also is, does this conflict take away? Is this something that's really focused on what's happening right now? Or is this part of the bigger picture to let us forget that the tariffs are going to expire and not expire, but we're going to have tariffs start in about a week here. That's going to send shockwaves through the markets. You know, there's all these things happening, and the war is a conversation, but we do have tariffs happening. We do have our debt, you know, $37 trillion in debt that, as you mentioned, is not going away. You have the big, beautiful bill that's going to add at least $2.4 trillion in debt over the next 10 years. So everything is building more and more debt. But I also think it leads to what I think is going to happen. And the markets are saying this. They're expecting 2 rate cuts this year. And I think aggressively there's going to be some kind of Fed change or movement to get rates down by the end of this year. But that will just send the dollar even weaker, and it'll put more money in the market, and it'll really send a message to the world that we're in a desperate situation.
I think that'll be a rocket ship for gold and silver, obviously.
Oh, 100%.
Because these prices are still, I feel, fractional compared to where it's going.
Yeah.
But as far as all this, the debt, we need to finance all this, right? And there's basically 2 options. We either sell our debt, sell our U.S. treasuries, which from my research, I'm seeing that demand diminish across the board around the world, right? Who's going to want our debt when our dollar is going into the toilet, right? So what's option 2? Well, we got to grow our way out of this. Where's the growth? We're not hitting anywhere close to that 3% target mark. And I think we're going to need more than 3%. We're going to need to be 3.5%, 4% for a sustained period of time, maybe as long as a decade, just to bring this debt, just to bring it down into something manageable. right? We're currently 124% debt to GDP. And by every metric, that's set to hit 140% by the end of this decade.
Right.
And that's part of the reason why countries do not have an appetite for U.S. treasuries.
Right.
What are they doing instead? Well, record amounts of gold and silver purchases by central banks.
And who wants to hold on and clip coupons for a 30-year treasury note at 4 to 5%, right? I mean, it's just burning your money.
Yeah.
I mean, it's you've seen platinum up 25% this year, right? Gold and silver are up significant this year, and it's hard to convince somebody to hold on to U.S. debt for 30 years at such a low interest rate.